Hey, good morning. It is Tuesday, my favorite day, June 14th, 6 a.m. on the dot. And take a look at the news in the markets. I don't know where they get this stuff, how they make it up. They're now saying it's the Brexit that's causing crude to come off. Another report that you read will say something different, that it's the um, pipelines in Nigeria that were getting blown up, and now that that's resolved, it will mean that more supply is coming on the market. Um, Prices go up and down, and our job is just to identify the market state, find levels of support resistance where it could react to. So we have an uptrend, and we're in an uptrend. We're coming back into support, and you can see the 200 EMA is offering that level, and we're backing up to that level. So, I mean, it's pretty simple. Once it gets to one of these volatility levels, it's likely to resume the uptrend. If it breaks through the volatility level, the uptrend is over, and this was a bear flag because we were in a downtrend, and we're going to resume the downtrend. So we could resume the downtrend, we can go flat, we can go sideways, we can, you know, change our mind and go back up, but usually it will follow a path. The path of least resistance right now is up until broken. We're in a period of consolidation, coming back into the support in an uptrend. So that's about it. It's pretty simple. That's on the daily. You can get a better picture on the weekly of your trend conditions, and I recommend that you do that. And you see that we came up to the second level and are starting to pull back. We actually have another level and all of this to get to. So there's room to the upside on this market, but technically we could be rolling over right here to resume the downtrend. So pull up your charts and get a feel for where you are in that market. If we look at this on an intraday time period, say the 30-minute chart or the 15-minute chart, you can see that we fell into some support. And this support is what I use as my super trend indicator, which is a volatility based indicator that's based on standard deviation of the price movement. And you can change your standard deviation levels inside the indicator and get a feeling for the markets on where they move. I also have a shorter term indicator, the high-low activator, that is excellent for defining short-term moves. And if I can get a close on this high-low activator in the direction of my super trend, that is what I'm looking for. I want follow through. So right now my super trend is running short, but I'm at a resistance. It's going to be bumpy here until it breaks through that, and then it's going to be bumpy here until it gets to this level. So we have two confirming levels. This 4802, does that match my daily 200 EMA? Let's go back and look at what that level is. So you've got to write down your levels in the morning on how much room you have to trade. So I know that I want to be moving down, but how far do I have to go? And then once you can figure that out, you've got a trade plan. So 47.93. So I would say 48 is all really we have, 47.93, before this stops and stalls. and tries to figure out what it's going to do as far as going up or down. So we really don't have that much room on the downside in crude. So let's take a look at it on the micro. And you can see that, oops, you can see that we're coming into yesterday low at 48.21, high probability, and 48.12 is S1, another high probability. And we're in a current down period. So some high probability trades into S1. So once we get the open and get our little bit of movement out of here, I'm going to be looking for shorts on my smaller time frame chart to take those. And I have my indicator set up on inflections both, but I can put them on inflections short. Oops. Or I can take all reversals short. And this would get a higher pullback, say like at the open, if it comes back to come into here. And this is the initial balance high of Globex sitting at the 25% low. So here's a good place for the market to come back into. So you look for your pullback zones. The higher you get, the better. If you want to go short, and then take a trade once you get a signal. You know, I always thought that I was smarter than the market, and I'd always try to put my order in at a level. And I realized after beating my head, you know, flip a coin, sometimes it worked, but a lot of times I got rolled over. It did not work. And I learned to wait for the signal, because once you get the signal in the direction overall that you want to trade in on a larger time frame trade plan, then you have a much better shot at doing this. And especially when you put the weekly, daily, 60-15 on that. So right now, I mean, that's basically it. Trading support resistance with volatility and setting up my chart, my magic chart, to take the trades when they set up in that direction. So that's about it. Let's look at the calendar this morning. We do have retail sales coming out at 7:30, and business inventories at 9. So there's going to be some opportunity for some trades here, and we're going into FOMC. So the E-minis started selling off in front of that meeting. So expect some reaction off of these numbers. Let me go into the rules and disclosures real quick. When you start trading, realize that it's very risky and not for every investor. You can make a lot of money, especially using leverage, but you can also lose a lot of money, including more money that was in your account. You can end up owing your broker. So be very, very careful, and always sim trade everything forever until you are profitable before you start trading. And good luck. If you like my templates, if you would like help formulating a trading strategy and figuring out how long you can sit in a market, I mean, these moves, once you understand what you're doing and can see an extended move, and then go and break that down on a smaller time frame, this was yesterday. there can be nothing better um, in trading than understanding this concept, setting your chart up to make you money, and then going after it. All right. So, y'all have a good one and good luck. Thank you so much. Bye bye.